Now, we may not know when regulators may approve the Instagram deal, but we do know that Facebook has had a very rough time on the NASDAQ with a record-setting number of options trading hands. Is more volatility ahead? For more, I want to bring in our editor-at-large, Corey Johnson. Also joining us from Chicago is Janet Tavakoli, president of Tavakoli Structured Finance. She's betting against Facebook and has put her own money on Facebook falling even further. Welcome, both of you. Janet, first of all, why are you betting so much of your own cash on Facebook dropping?
Well, this isn't a huge bet. It's sort of like saying, I'll bet you 20 bucks Facebook will fall. In this case, it's a little bit over 20,000. But I bought puts on Facebook, and I did it with a certain strategy. First of all, you may recall that, more than a year ago, Facebook had a phony profile of me up. And that got my attention because I don't normally, look at the tech sphere very much. And I said, well, let me take a little bit of a look at this. And sure enough, the platform is kind of creaky. People can put up fake profiles at will. I don't think that Facebook can tell you how many authentic profiles it really has. People aren't clicking through on ads. Google gets 8 times the clicks on ads that Facebook gets. Where is their sustainable revenue going to come from? When you look at their revenues of $3.74 billion, 85% of that was from advertising, and they had net income of $1 billion. So if they get whacked on their advertising, that's a really big hit to Facebook. They can go negative very quickly. And GM, one of their big advertisers, pulled out its entire $10 million budget because it was not seeing results. Now, that's the kiss of death. Then you look at, where is Zuckerberg going to make money? And I looked at this IPO, and it's basically an IPO based on hot air. And the gain here is to bring the shares at an inflated price, let the people who were buying it in the private market pre-IPO dump some of their shares, which they did, and then use the inflated shares to try to buy companies that actually can make money and can produce revenues. And so basically you just create this big acquisition entity, and the investment banks that brought the Facebook public will get fees every time it buys another company. Unfortunately, It's not working out that well for them because the share price was dropping.
Okay, Janet, hang on. Corey, I want to bring you into this conversation. She calls this an IPO based on hot air. Corey, how would you respond to that?
Well, I think there's the business of Facebook, and the business of Facebook has its challenges, but it's very good. It's throwing off a ton of free cash flow. It's a very profitable business at that. Now, the valuation's a whole different question, and the valuation, we've been talking about this for weeks now, and it assumes a lot of good things, a lot of great things that have never happened are suddenly going to happen for this company. And only at that price can you start to buy the stock here, I think, because you have to imagine really 2 things. You've got to imagine their business gets a lot better than it's been, and I think it's already been very good. They think it's going to get even better if you're going to pay this price. And then secondly, you have to imagine the market's going to pay a very high multiple even years from now on the stock. You've got to imagine it'll make at least $2 a share, let's say 3 years from now, and the market might trade that at 20, 30 times earnings. So you've got to imagine a lot of growth and a really high valuation going forward, and that's certainly a risky proposition.
Yeah. Now, Janet, you're betting that the stock essentially goes below $25 a share sometime in September after the initial lockup period for insiders ends. You've also said that you think a $100 billion valuation for Facebook is ridiculous. What do you think is a fair market value for this company?
$100 billion it was just emotion in motion. And by the way, RIM, Research in Motion, was one of the acquisition candidates that it was rumored that Zuckerberg was considering. So imagine that. But, this was basically people wishing and hoping this would be the next Apple. And maybe it will be, because Apple is trading at 14 times earnings. And maybe it will get there. But my point about Facebook is when you buy puts on them in September, first of all, the put price has already gone up. So on paper, there's a 20% gain. That could be completely erased tomorrow. But the idea is that you're looking at that increase in volatility and people thinking that the price is going to go down and could go down that much in September. Now, if you look at what's happening in August, the first lockup expires, and then another 270 billion in shares can hit the market. 270 million in shares can hit the market. And I think that you will see a lot of insider shares hit the market, which are now restricted because of tax reasons. And Facebook itself may have to sell employees' stock in order to cover a tax bill. I think you're going to see people try to get out the door faster because another 1.2 billion in shares will be eligible for sale in November. So if I wanted to sell the shares, I would try to get out in August. And I think you may see even further price pressure, downward price pressure, as this goes on.
All right, Janet Tavakoli of Tavakoli Structured Finance and our own Corey Johnson, thank you both for joining us.